You want a reason to be worried about the stock market? Look at these valuations. Oh my goodness. Oh my goodness. Because I always get the idea the market's so highly valued. Record highs. I always get that all the time. So check this out. We're going to go here. This is S&P 500 PE ratio by year. And this is this website. I don't even know what that is. But anyway, I'm a big fan of this. I haven't looked at this website for a while. Big fan. Long time, first time. So we're going to do S&P 500 by year. And these are the PE ratios. February 19th, 2025, 30.76. 30.76. Hasn't been that high since January 1st, 2021. We know what happened in 2021, do we not? Yes, we do. Let's take a look what happened in 2021. Let's take a game. The market was up 26.9% in 2021. Okay, so scratch that. 2022, the PE ratio was from 35.96 to 23.11, and then that's a pretty significant decline from 2021 to 2022. Even though the S&P 500 was up 27% in 2021, then the PE ratio fell from 36 to 23. What happened in 2022? Oops, wrong one. What happened in 2022? It was down 19.4. So valuations fell off a cliff from 2021 to 2022, even though the stock market increased, the S&P 500 increased by 27%. That's kind of crazy. All right, look at the valuations. Let's keep going. Look at the valuations in 2029. 70.91 in 2009. Excuse me, 70.91 was the PE ratio. No way you invest in 2009, would you? No way. That'd be crazy, Josh. You'd be nuts. I keep doing that wrong one. You'd be crazy. That's my man Daniel Colbert. He's got so many spreadsheets. My man is a spreadsheet genius. That's all there is to it. I love that guy. So let's take a look at what happened in 2009, shall we? Oh, the market was up 27.1. What? That's crazy. Look, the beginning of January 2009, the S&P 500 had PE ratios of 71. And what happened in 2009? The market, the S&P, I keep doing that. The S&P 500 was up 27.1. That's kind of weird. You definitely would have been better off investing in 2007 when the PE ratios was at a fourth. Yeah, a fourth of what it was just 2 years later. Look at 2007, man. You'd be definitely better off. I keep doing that. Couldn't say what, but I keep doing that. Oh, Joshy. Let's take a look here. 2007, the market was only up 5.5. All right. Well, in 2008, you would have been better off. Look at that. It's only at 21.46, which is, a third of what it was a year later. Well, 2008, you were down 37%. I keep clicking that for some reason. That's crazy. All right. We definitely don't want to invest in January 1999, where PE ratio is right there at 33. In January 1999, PE ratio is at 33. And then we come over here. We're going to say 1999. We'll just go down here. Oops. Let's go. Hold on a second. We're just going to go boink. 1999. Let's see what market did in 1999. Well, I already know. In 1999, it's up 21%. Kind of weird. PE ratios in 1999 were at 1999 were at 32.92, and yet the market was up 21%. PE ratios in 20 were lower than they were in 1999. PE ratios in 2021 were lower than they were in 2000 and 2001. And yet what happened? The markets was down. They're higher here, lower here, and even lower here, and the markets kept falling. That's kind of weird. PE ratios in 2002 was at 46. You can make an argument you shouldn't have invested there. Remember, 2002 was when we got spanked big time, 22.3%. That's not good. And so, but PE ratios fell to 22.73. So you can make an argument. Look at that, 2003, they're still at 31. 31. They're higher than they've been since 1999, and yet in 2003, what happened? We're up 28.7%. Kind of crazy. Let's look at 1973 and 1974, because definitely the PE ratio is going to be high then, right? 1973, 18.09, which is lower than it was in 1971. Kind of crazy, right? 18.09, 1973. So again, that's lower than it was in 1971, right? And we're just going to look at our numbers here. In 1973, we're going to come over here, boink. Let's just go right there. 1973, we're down 15% in 1973 when PE ratios were actually lower than they were 2 years previous. In 1971, we were up 14%. It's almost like there's no correlation here in terms of PE ratios and the market return. We definitely don't want to invest in 1970. I mean, we definitely should have invested in 1974 because look, PE ratios fell from 18.09 to 11.68. We definitely want to invest in 1974. A massive decline in PE ratios, i.e., valuations. In 1970, oh no, we would not have wanted to invest there because the PE we got smoked. But that doesn't make sense because the PE ratios fell from 18.09 to 11.68. Kind of crazy, isn't it? Let's take a look here. What else? Definitely want to invest in 1981. The PE ratios are only 9.02. Very, very low. Look at that. Way lower than they were in the 70s. Definitely want to invest. And what happened in 1981? Down 5.3%. Kind of weird. During the Reagan years, we started having the PE ratios go up in the double digits. 11, 14, 18, 1987. How dare you? 15, 15, 25 in 1992. Definitely don't want to invest in 1992. 25, 22, 20. I mean, because look at what happened in the 90s, man. We got crushed. Look at the 90s. And 31% in 1991, 7.6, 10.02, 1, 38, 23, 33, 28, 27. Wow. Holy crap. Look at those valuations. Crazy. Let's keep going back. Let's go all the way back to 19. Let's take a look. Look at these PE ratios at the beginning in 1922. I mean, we've never seen anything like this. 22%. It's the highest it ever been, except for 1895. Look at that. The second highest it's ever been in 1922. You definitely don't want to invest then, man. That's crazy. 22.58 to start in 1922. You definitely don't want to invest then. And then what happened in 1922? We're up 29%. It's almost like the PE ratios at the beginning of the year don't track with the actual overall market return is where I'm going with this. So I hear all the time people say, oh man, the market's too high, the valuations are too high. I say, you know what you should do? You should be like this guy right here. So I'm just going to sleep through it. I'm not going to pay much mind to it. Because remember, my friends, the reason that the valuations are always so high is because, I should say, in this case, the reason the prices are always so high, the market is always at all-time highs, quite simple, because the market goes like this. To the moon. That's the moon right there, the man on the moon. He's smiling. The market's lower, it goes up, goes down, goes up, goes down, goes up. Has always, I can't guarantee it will, but has always gone to the northeast. Just like that. So you're always going to be at market highs until you have this little downturn. You have a little downturn, and then you'll go back to up. A little downturn, go back to up. It's always going to be like that. Or else why would anyone even bother investing in the equity markets? If you didn't think that was going to happen, you'd stay in the bonds. It doesn't make sense. Anyway, you can get nervous about this. You can say, oh my goodness, Trump or Biden or friggin' Putin or whatever you want to do. I don't care. At the end of the day, the capitalist system that we live under, it's not really capitalist, give me a break. But the equity-based system of companies making profits isn't going away. It's just not. I mean, we're not going to go a la Bolsheviks. And the reason is because the people in power make too much money on the stock market. They just do. And they're not going to give that away a la the Bolsheviks. They're just not going to. I mean, they could. I don't know. But give me a break. So at the end of the day, should you worry about this and say, oh, I better jump out before the market sinks? No. I mean, if you can't sleep at night, sure. But just being in the market is more important than anything else. Just staying there and let the power of dividends, compounding growth in terms of earnings growth year over year, the power of the fact that you need to buy stuff for your dog. You got to buy this. It's made by some company, probably 3M or something like that. I mean, these are, whoever makes dog food, I don't know. You know what I'm saying? Puppy Chow, Meow Mix, meow, 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 meow. All right, give me a thumbs up if you're familiar with Meow Mix cat food. Meow Mix. Crushed. God bless. We'll see you.